Hi, this is Randy Finney with Right Side of the Chart, and this is a midday market update for Friday, November 4th, 2019. I was going to hold off and do a end-of-day market wrap as I usually do, but I wanted to cut out of trading early. I've had a good day. Want to get a few things done today, a couple errands knocked off, so I may sign off a little early today. Want to get this one out. I don't expect any big fireworks before the close today, and if something big does happen, of course, I'll do an additional update, get that out to you guys. But as of now, things look good. Now, before I get into the charts, there's quite a bit to talk about here. Some interesting developments, markets up big today, what it means, where we might be headed, and all that. I'll get to that in 1 second. Just wanted to cover a few housekeeping items. Um, I've been fielding a lot of questions since the closing the site for new registrations. I don't yet have a firm date on when the site will reopen. There's a couple things that I'm working on the back end, working on a new support page and some other new features to the site. Hope to have all those rolled out sometime here in the first quarter, probably towards the end of the first quarter. So that's February, sometime February, March. I can't put a hard date on it now, but looking at somewhere around those time frames. So maybe another month or two, and again, I'll communicate that could change. So now, if you are not already aware, I've fielded a lot of questions from this. If you'd like to know when the site opens for registration, just visit rightsideofthechart.com. No need to type in the www, in fact, or www. Just type in rightsideofthechart.com or rsotc.com. That's our short URL, rsotc, rightsideofthechart.com. Will take you to the site, and then just scroll down here towards the bottom where it says join us, learn more. Click on that, and it'll take you to this next page where you can enter your email address here, and as soon as we do open the site, or even in advance, and when I know anything, I'll shoot out an email with details on that. So again, that's for those of you that are looking to join. Um, the other thing I wanted to mention for current existing free trial members of the site, before I close down registration, there were quite a few free trial signups, and I extended those through the holidays because typically I don't, trading usually is things slow down, drop off. Obviously, this holiday season was a little bit different, but normally I'm on vacation, and typically I'll take a week or more off, go somewhere with the family. But this year we just kept it short, did a couple of mini vacations, and again, being that I was out and the trade ideas have been unusually light, I extended those free trial periods. So if you are on a free trial period, that will be ending. All those that were extended will end this weekend. So you'll have through this weekend, and you'll still be able to join the site because you're already registered. So just log in as normal. I'll send an email out on this to update that as well. But you just log in as normal, and you'll be directed to the sign up page and be able to subscribe to a silver or gold membership. All right, let's dive into the charts here. So today, strong day on QQQ, and again, this is just the new norm here. These 3-4% plus price swings, at least as of recently. But this can be construed as nothing but bullish price action. So it only helps to reaffirm my near-term bullish outlook. I'll get to the shorter-term levels in a second here, but you can see a big green candle, and again, so we had that one day with a red candle back here on the 28th, but again, I mentioned that both SPY and QQQ closed barely flat down. It was pretty much a flat day. So pretty much since the washout, sellout, capitulation low on December 24th, we've had nothing but up days, and yesterday was simply a correction. And I'll say this, I want to digress for a second. I love the comments on the YouTube page. I don't get a chance to reply to those very often. When things slow down, I do go in and will read those. In fact, I can't even read all the YouTube comments, unfortunately. My primary focus is on my own trading and on, answering questions of members of the site. And even that I'm still behind on from the holidays. But I will say this. I appreciate all the comments, feedback, and I appreciate constructive criticism, opposing views, as much as I appreciate positive feedback and everything else. The last thing in the world I want on the site, on rightsideofthechart.com or anywhere, is a bull blog or a bear blog where everyone's on the same page. However, keep the comments constructive, guys. That's all I ask. Again, at least on the site, I appreciate everybody in the trading room keeps it civil. YouTube, it's a public thing. You're going to get those comments. But where I'm going with this is I just glanced the comments from yesterday's video, and boy, I'll tell you what, if there's a good contrary indicator, it's got to be some of the people that come out on the page on YouTube. And again, it just shows that, when the market's going up high, and again, when I got bearish up here, everybody said, oh, you're crazy. The market's not going to drop. How can it drop 20%? How can it go down to those levels? We're in a bull market. Buy the dips, buy the dips. And so you're getting the same thing in reverse here now. So, and you'll see it also in the sentiment surveys. Everything, when you come down to the washout lows here, everybody thinks the world's going to come to an end. The market's going to drop another, I don't know how much, but like I said, the thing about the market right now, the long-term technicals have not changed. They're ugly. We're probably started a new bear market, but bear market rallies are extremely profitable to trade. And we had in QQQ, as you can see in the pop-up box on the bottom left in red, it's about a 23.5% drop. Call it a 23, 24% drop. That's a pretty hefty correction in just a few months. And again, this is not 2008. This is different. The economy is stronger right now. I think things have and will continue to turn and slowly roll over. But with that being said, we had the banking system, which was already, the wheels were already in motion for the verge of the collapse of the banking system back in 2000, in January, heading into January 2008 after the market topped in back in October '07. And again, the economy is just plain and simply, it's on a stronger foothold now. So what I'm trying to get at here is don't underestimate just how far this rally might go. Right now, I'm looking out ahead. I've given you levels, near-term levels. We'll have to go from there. But I think after today, if nothing else, we had that sharp rally. I was out of town that day, but it was on December 26th. And that was certainly a WTF moment for those that were caught short at that time. But this was also probably just, I know it was chalked off by many as just being simply a short squeeze, a bear market rally or whatever. I think today is a little bit different. And again, going from the comments on the YouTube channel and other things I've seen out there, we look at the charts. We had that pullback yesterday, and it was pretty, it was big compared to historical standards, but it's the norm recently. And it was, again, just what I view as a healthy pullback now, especially that's in hindsight. It could have certainly developed into something more, and I would have been open to that. But we had a drop of, what was it, over 3% yesterday, 3.5% in QQQ, which again is run of the mill for the recent volatility that we had. And remember, nothing goes up forever. We've had, again, if you count this flat day, then we had about 6 consecutive days there, up days in the market. And you need to have that to clear out the near term, the very short term overbought conditions. You need to have pullbacks. They're healthy. And what it does too is it sucks in some more shorts, some more bears that think the market's going to go down 40, 50%, or I don't know how much, without a decent rally. That sucks in those shorts, and they're being squeezed out today. So they helped fuel this advance. And now let's look at the chart. So really, I've been living largely in the world of the 60-minute charts recently, and here are those trend lines. There's the breakout back test, everything that I covered yesterday. Again, I don't want to go into that too much, rehash all the same stuff over and over, but basically you can see on the fibs there, like I said, it was a 50% run-of-the-mill counter trend pullback, and now we've broken out. Most importantly, we took out the recent highs right there. That's what I was waiting for on QQQ and particularly the futures. So you can see QQQ is broken out. I'm doing the video now because I don't expect a lot of fireworks today. Here's the thing. That is a breakout. Would I chase it here? No. But I still think if you bought here today, you'll be fine next week. But again, it's Friday. Who wants to establish a long position Friday? Within 2 hours, the market will close in just over 2 hours from now. I'll point out a few things here. So there is some potential divergence right now forming on the 60-minute chart of QQQ. That's, something we'll have to monitor. We don't have it there on the RSI. RSI has gone a little bit higher. what I think will happen is we'll come back in today or on Monday and back test that level and probably undercut it a little. I wouldn't be surprised to undercut it a little, and wash out some maybe wash out some of the longs that bought the breakout. Maybe I don't if the shorts haven't been discouraged yet, maybe suck in some shorts and then continue on up. So bottom line is near term. Very near term, that's hard to call. I don't know whether we continue on up, but I do favor at least before the close today or sometime on Monday a back test of this breakout, and that's QQQ. And again, I'd like to get to the futures here in a second. They look a little clean. They show that level a little bit more clearly, I should say. Here's SPY, same story. You can see there's the recent highs. Let me put a line up on there. So you can see we took out the highs, not by a whole lot. We're trading a little bit above there, and there is again some divergences that we need to watch that. They may be taken out. They're only potential divergences. By that I mean the PPO is still pointed up. It's a momentum indicator. RSI is put about an equal high in, roughly equal to that previous high. So we may have some divergences that could play out. And so far we've had, let's get to the futures. I'll show you that. All right, let's look at this. Yeah, here we go. NQ. So this is Divergence City, and they play out. I'll tell you, these divergences more often than not play out. So it started with, it started back here heading into the December 24th lows with bullish divergence right there. You can see on the RSI at least, and that led to that rally, and then it set up this bearish rising wedge pattern, which I highlighted recently, and there it is. You had negative divergence on that. You had a breakdown, a back test, another thrust down, and then that ended with positive bullish divergence, which I highlighted in yesterday's video, and that divergence is now played out. So it's a fast moving market. If there's any takeaway from this video, and I know sometimes I've seen the comments, I can make people's heads spin because I can flip from bullish to bearish one day. That's this market. When you're moving up 3-4+ % in a day, it's like the old market from 2017 with the fast forward button hit on 3 times speed. You're getting those same gains that used to take weeks or even months, and they're coming in just days. So you have to be, if you're an active trader, you have to be flexible and willing to go long, short. But if you're a longer term investor and a less active swing trader, which I know most are, again, nothing has changed in my near term outlook. I'm still was looking for a rally into late December. It started the day after Christmas. You can call it a Christmas rally. You could say Santa delivered the rally. Markets were closed, of course, on Christmas Day, but the rally started the day after Christmas and went all the way through the end of the year and continues on now. So I still think, if you're willing to ride out this volatility, I'm still nothing's changed my swing positioning. Still long there and plan to be for a little while. Again, I'll hone in on some specific targets. But right now, just looking at this chart, I think we come up here at least 257.23. And you can see I've already covered some levels here. We have a nice fib cluster right up here as well. 262 to about 264. There's 50 and 61.8 fib. I'm talking about the Fibonacci retracement from the move off the highs down to the recent lows, as well as the move off this most recent reaction high, which is the same as these three. We had that triple top there on SPY. And so that is a natural swing target right now for, let's say, the coming weeks, sometime in January, possibly February. But it's a volatile market. Nothing goes straight up or straight down, so there'll be some zigs and zags along the way for sure. Okay, so back to the futures. Also worth mentioning, I had that 64.70 level up there. That's pretty much been kissed today. If we zoom in, you can see that's about where NQ stopped today. So like I said, I think before the close today, or at least by Monday, we come back in a little bit. So do you want to chase a breakout now with the NASDAQ 100 futures up 4.42% down here in the lower left corner? No, but if you were, if you had the gumption to ride out that pullback or buy yesterday, or even today when you saw the futures opened up, there was plenty of opportunity. Or when the market opened up, you're doing well. So we'll watch this. And right now, like I say, let's just say very near-term neutral. I'd like to see what happens from here. Maybe Monday when the markets reopen, look to see if we continue to move up, or maybe on a pullback, see if it's objective data at that time. and ES. These are the S&P 500 E-mini futures, also a 60-minute chart. So here's that potential divergence. And again, I have to emphasize the word potential because the PPO is pointed straight up. This is a strong rally. There are a lot of natural buyers coming into the market today, realizing that as I said, that the forced selling is now over, and the market, as it so often does, has probably overshot to the downside, at least again for the near term. Not talking where the market will be 6 months from now, but I'm talking where the market will probably be 2-3 weeks from now. And we've seen a pretty good rally so far. We have this potential divergence to watch, but whether that plays out for a pullback before then, we consolidate a little first, or we keep on going. I still maintain this target zone area here. Runs from 25.94 up to about 26.26 or so, and with that upper part really be my preferred swing target at this point in time. Okay, I think I'll wrap it up here. Like I said, so far so good. And, again, we're up so much today that even if we drift back down below these levels, at least initially, I'm not going to consider that a failed breakdown if we come back in down below, the 25.22 level. That's at, again, this level that was just broken out. And the reason being, when you break out, I prefer to see a breakout come after a little bit of consolidation first to work off the overbought conditions. So at this point in time, let's just say between now and Monday, I think we'll kind of trade around this level, maybe come back in. If we come back in, by the way, 24.93, that support level. In fact, I did a video for members of rightside-of-the-chart.com this morning. That included a lot of trade ideas that I'm looking at, as well as just the general market analysis. And I added this line here, and I said we need to break that out. At the time, we were challenging that level. We broke out above it and continue to run. So there's an objective pullback level, and I know these are futures. You can try to correlate that with SPY if you're a SPY trader. I don't want to see us go much below that on a pullback, so we'll have to cross that bridge if and when we come to it on Monday. But if we pull back to it, I think that's an objective area to add some long exposure for the next ride up. And on NQ, I had a comparable level. Let me see if I can get back to that NQ chart. There it is, 62.72. That was a level, I believe, that I added since the last update. Right there. And I'm sorry, right here, 62.72. So we took it out today, and after the video, and you can see it was a powerful level. There were a lot of reactions along there, so I don't think I had that level in there yesterday. NQ strong. I suspect that if SPY pulls back to that level, NQ might fall a little shy. If it does, an objective level to add with a stop somewhat below. But remember, you may not get that today. I think has a lot of the makings of a WTF moment. I talked about that, on the bear side during the correction before, that we would see that WTF moment where bulls and dip buyers finally realized it wasn't a great dip buying opportunity, that something else was going on. So I think near term, this looks like a WTF moment for a lot of market participants, mainly both those who are bearish and short after yesterday being charged up on that move, probably realizing what the heck happened today. There's something wrong here. We should have kept going down. The onus was on the bears yesterday to take it down, and they failed. They could not capitalize. And again, it's not a bull bear thing. I'm just talking about supply demand dynamics. Just saying that there are more buyers in this market right now. Institutions are buying. They have cash. They're no longer under forced selling pressure, and valuations with that 20+% knockdown in the market has created some buying opportunities, especially with the economy not, rolling over hard. It's as simple as that. So, all right, we'll wrap this up next week. This has been Randy Finney with Right Side of the Chart. Hope